Good evening. Here at AI Crypto, we're doing the crypto news thing too, and we'll be doing it on a nightly basis throughout the week. AI Crypto News will be your go-to source for all the latest developments in the world of cryptocurrency and blockchain technology, delivered in 5 minutes or less. As we all know by now in crypto, the crypto space is not immune to black swan events, as Silvergate Capital Corporation will voluntarily liquidate Silvergate Bank. Silvergate Bank will be the latest major crypto institution that has officially declared being insolvent. The parent company of Silvergate Bank, known to many in the space as one of the major crypto banks, has announced plans to wind down operations and liquidate the bank altogether. As of March 3rd, many crypto firms collectively, including the likes of Coinbase, Paxos, Gemini, Bitstamp, and Galaxy Digital, announced they would cut ties to the bank following an investigation into Silvergate's alleged involvement in the collapse of FTX. The bank closed its exchange network on March 3rd, claiming the termination was a risk-based decision. The fallout from Silverbank has caused a ripple effect across the marketplace, resulting in Bitcoin and Ethereum experiencing declines of 4.53% and 4.47% respectively. However, traders remain optimistic about Ethereum's potential movement in March, with a projected 25% correction before the next bull cycle. The bad news today for crypto markets didn't get any better for both Bitcoin and Ethereum, as Bitcoin has dropped below 22K following comments from US Federal Reserve Chair Jerome Powell, who stated that interest rates would likely be higher than previously anticipated. Bitcoin reached a low of $21,965 during today's session. Ethereum also saw a decline, with a minor drop from a high of $15.68 on Tuesday to a low of $15.43. However, Ethereum has since regained ground and is trading at $15.58, above a recent support level at $15.50. At the end of the day, these events shouldn't stop you from accumulating crypto in this bear market. Money is made when there's blood on the streets, so keep filling up your crypto bags, while all these great projects are heavily discounted for the time being. Thanks for tuning in, and please be sure to like and subscribe and hit the notification bell for more AI Crypto News at Night updates. Stay blessed! Welcome again, AI Crypto Squad. Today we're going to take a closer look at Apecoin, a governance and utility token at the forefront of Web3. Let's get into it. Apecoin is an ERC20 token used within the Ape ecosystem to empower and incentivize a decentralized community. Apecoin holders govern themselves via the Apecoin DAO, which controls the decentralized governance framework, and they vote on how the Apecoin DAO ecosystem fund should be used. What sets Apecoin apart is that it gives its participants a shared and open currency that can be used without centralized intermediaries, allowing token holders to participate in Apecoin DAO, giving them access to exclusive games and services. Additionally, Apecoin is a tool for third-party developers to participate in the ecosystem by incorporating it into services, games, and other projects. The Ape Foundation was gifted a one-of-one NFT by Yuga Labs, the creators of Bored Ape Yacht Club, conveying all rights and privileges to this NFT and its underlying artwork to the Ape Foundation. Apecoin DAO members can decide how this intellectual property is used. Apecoin has a total fixed supply of 1 billion tokens, all minted at once, with 30.25% in circulation on launch day this past March of 2022, and continually increasing at regular intervals over a 48-month period. Apecoin is secured by Ethereum's proof-of-work consensus mechanism and is available to trade on numerous exchange platforms, including decentralized exchanges like SushiSwap and top centralized exchanges. But what sets Apecoin apart in the future of Web3 and the metaverse? The Apecoin ecosystem is the most valued metaverse project, which is the most valued metaverse project in terms of total market capitalization and the total value of its virtual world. Ape will be the primary currency of the Other Side metaverse, which has 100,000 virtual land plots with a floor value of 1.6 ETH per land plot, and the Apecoin ecosystem will also see a native NFT marketplace and a clothing brand. Although Apecoin DAO is registered as an independent entity, Yuga Labs plays a big role in its adoption. Recently, the firm launched an endless runner game, Dookie Dash, for the holders of Bored Ape Yacht Club and related NFT collectors. Moving forward, the development and user engagement of the other side metaverse will determine the traction of Ape's usage. With a current bear market price of $3.75 at the time of recording, aping into Apecoin is a wise idea, especially at these bear cycle prices. Not financial advice. A consistent rise in NFT's prominence can help Apecoin remain at the forefront, and as a result, the coin could reach $75 at the height of the next bull cycle by the end of 2024. Thank you for watching this edition of EH-iCrypto's Apecoin Explained video. Don't forget to like, subscribe, and comment for more exciting crypto content. Stay blessed. Welcome, EH-iCrypto Squad, to another exciting episode of EH-iCrypto News at Night, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. First up, remember that Apecoin piece we dropped a few weeks ago, explaining all the reasons why you should be paying attention to this crypto gem? Well, we've got another reason why Apecoin is about to roar louder than a gorilla in mating season. Luxury fashion powerhouse Gucci has just teamed up with Bored Ape Yacht Club creator Yuga Labs to explore the metaverse. And guess whose Ethereum-based crypto token is right in the mix? That's right, Apecoin. With Gucci and Yuga Labs working together to blur the lines between the physical and digital world, Apecoin is set to make some serious noise in the next bull cycle. Gucci today teased out an alliance on Twitter using an image that shows Gucci and Yuga Labs branding on a bottle that was previously seen in the trailer for Other Side, Yuga's upcoming Bored Ape-themed metaverse game. This isn't the first time Gucci has dipped its toes into the metaverse waters. They've already made a splash in digital fashion, collaborated with 10KTF, and even bought virtual land plots in the sandbox to develop. But this partnership with Yuga Labs takes it to the next level, giving Gucci an active role in Other Side, Yuga's upcoming Bored Ape-themed metaverse game. So if you haven't already jumped on the Apecoin bandwagon, it's time to take notice. As we've said before, Apecoin is the real deal, with serious liquidity and all the right ingredients to make it a major player in the crypto space. So don't sleep on the ape. The link for my Apecoin Explained piece is in the description below. Binance CEO CZ has come out swinging against allegations made by the CFTC denying claims that Binance has traded on its own platform using house accounts and has not made proper disclosures to customers. In a detailed response to the CFTC's accusations, CZ argued that Binance does not trade for profit or manipulate the market, and that the allegations are an incomplete recitation of facts. He also refuted claims of insider trading, stating that Binance has strict policies in place to prevent employees from actively trading and obtaining private information. Despite the unexpected and disappointing allegations, CZ emphasized Binance's commitment to compliance, highlighting the platform's best-in-class technology and more than 750 people working to ensure the business operates within AML and KYC laws. With 16 licenses to offer digital asset trading services, Binance is clearly not backing down from its position as one of the top cryptocurrency trading platforms in the world. While the crypto space continues to grow and thrive, the US government seems to have a hard-on wanting to tighten its grip on the industry. After going after Coinbase last week, the feds have now set their sights on Binance, leaving many wondering what their endgame is. It's clear that they're trying to regulate the crypto space, but at what cost? Will their actions stifle innovation and growth, or will they ultimately help legitimize the industry? Only time will tell. But one thing is for sure, the battle between regulators and the crypto community is far from over. With all the Binance drama with the US government, Bitcoin took a bit of a hit, falling 3.84% to $26,935 in the past 24 hours. Ethereum also saw a decline of just over 4% to $17.07, posting a weekly loss of 2.67%. But fear not, both tokens are still up significantly year to date, with Bitcoin up just under 63% and ETH up just under 130% respectively. Meanwhile, XRP has managed to buck the trend and gained just under 5.5% in the past 24 hours, jumping to just over 47 cents US. This comes as Ripple Labs, the company behind XRP's crypto payment network, faces a lawsuit from the SEC accusing them of selling an unregistered security. However, Ripple Labs president Monica Long remains optimistic that the court will rule in their favor when the case concludes later this year. So while the crypto market may be experiencing some fluctuations, there's still plenty of excitement and potential gains to be had. That's all for tonight's episode of EH-iCrypto News at Night. We hope you enjoyed the latest news and insights in the world of cryptocurrency. If you found this video informative, don't forget to like, subscribe, and share it out. And what are your thoughts on Apecoin's partnership with Gucci or Binance's ongoing drama against the US government? Feel free to leave a comment below and let us know what you think. Thanks for tuning in, and as always, take care and stay blessed. Good evening, EH-iCrypto Squad, and welcome to another episode of EH-iCrypto News at Night, where we bring you the biggest news stories in the crypto space in 5 minutes or less. As banks continue to slump, Bitcoin pumps. Our top story tonight is about Bitcoin, which has started a new week in an unmistakably bullish position as it passes 28K. After a week of chaos for macro markets and solid gains as a result, Bitcoin and altcoins are circling levels some have not seen for 9 months. The 2022 bear market is feeling like an increasingly distant memory as old resistance levels tumble and bulls attempt to cement newly reclaimed support. However, this week, as last, there are all sorts of potential hurdles to overcome. The Federal Reserve will decide on its next interest rate changes, and new macroeconomic data will drop. Markets will likely stay volatile as a result, and any further unexpected events from the banking sector will only add to the instability. In other news, a new study published on the Social Science Research Network found that nearly 200 more banks may be vulnerable to the same type of risk that took down Silicon Valley Bank, the value of the assets they hold. There are 186 banks across the United States that could fail if half of the depositors quickly withdraw their funds. Even insured depositors, those with 250K or less in the bank, could have problems getting their cash if these institutions face the sort of run that SVB saw a week ago. The concern is that these banks hold a significant amount of their assets in interest rate sensitive financial instruments like government bonds and mortgage-backed securities. The value of those older low-interest investments dropped sharply as the Federal Reserve hiked interest rates over the past year. The study shows that a slew of those other banks could be vulnerable to the same developments if a high percentage of worried customers start trying to withdraw their deposits. And finally, venture capitalist and angel investor Balaji Srivatsan believes that hyperinflation is happening now. Srivatsan is expecting the price of Bitcoin to soon hit $1 million and is making $1 million bets that it will happen in 90 days. Srivatsan also advised investors to buy Bitcoin, which he believes to be a hedge against hyperinflation, monetary debasement, bank freezes, and wealth seizure. It's highly unlikely, though, that Bitcoin will reach $1 million in 90 days, but a 50 to 75K Bitcoin price is definitely in play. As we continue to see the collapse of banks and these legacy financial systems as a whole, Bitcoin and crypto are a great way to safeguard your financial assets. Not financial advice. However, some speculate that the elite could very well be causing these collapses with the banks to reset the financial system by ushering in a CBDC, giving the government more power over us. But hey, it's too little too late, as Bitcoin is the big dog and there isn't a damn thing the elite can do. That's all for tonight's episode of EH-iCrypto News at Night. What do you think about Bitcoin's current bullish position? Do you agree with Balaji Srivatsan's prediction of hyperinflation and Bitcoin hitting $1 million in 90 days? Leave a comment below and let us know. And don't forget to like and subscribe for more updates in the world of cryptocurrency. Take care and stay blessed. Welcome, AI Crypto Squad, to another exciting episode of AI Crypto News at Night, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. Bitcoin continues to show its resiliency, with the price bouncing back up after rumors started circulating that Binance founder CZ being arrested by Interpol that actually turned out to be bullshit. Bitcoin's price hit new lows overnight, dipping down to $27,240, but it looks like it's making a comeback and heading towards that magical 30K mark again. At the time of this recording, Bitcoin is trading at $28,600. The macroeconomic climate is also in Bitcoin's favor, with the United States Federal Reserve potentially ending interest rate hikes, and you know those money printers won't be stopping anytime soon. So all signs are pointing up for Bitcoin, and if you have no exposure to Bitcoin, now wouldn't be a bad time to start loading up. Not financial advice. Next up, listen good AI crypto fam. With all the resources and information that's out there, I still can't understand why people are still falling for this type of fuckery. Because up here in Canada, where I'm from, a Toronto couple was duped out of $400K in a classic Bitcoin deposit scam that's been going on for years. The couple was encouraged to invest in some online bullshit platform that I've never heard of called cryptocurrencies.com. They were told that their funds would be secure, but little did they know that they were about to get finessed. After seeing their investment grow significantly on the platform, the couple wanted to draw out their funds. But they were either asked to invest more money or warned that they would face a larger fee to release their money. And it gets worse. The scam was actually done over the phone, and the couple transferred their money directly to the scammer's account, which authorities believe is outside of Canada. Of course it is. Now the police have been able to recover a significant portion of the couple's lost funds, but they're still trying to identify the other parties involved in the scam. Remember folks, always be careful and do your own research before investing your hard-earned money in any online platform or exchange. And if something seems too damn good to be true, it probably is. Stay safe out there. Well, that's all for AI Crypto News at Night, and thanks for tuning in. If you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about this Bitcoin pump and all the FUD that's being put out there in the crypto space? Go ahead and comment below. And as always, take care and stay blessed. Welcome, AI Crypto Squad, to another episode of AI Crypto News at Night, where we bring you the latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. First up, another major bad actor in the crypto space gets cuffed up, as Terraform Labs co-founder Do Kwon has reportedly been arrested in Montenegro. Kwon has been wanted by Interpol for his role in the $40 billion collapse that allegedly involved him ripping off many investors who had assets on the Terra Luna ecosystem back in May of 2022. His aide, Han Mo, wasn't spared either and reportedly got arrested with him. However, South Korean authorities are still waiting for fingerprint information from Montenegrin authorities to confirm their identities. Will Kwon finally face justice for his alleged crimes? We'll have to wait and see. In the latest development in the world of crypto, the SEC kingpin Gary Gensler himself now has set his sights on Coinbase, the largest crypto exchange in the US, for possible violations of federal security laws. The exchange's staking programs for crypto investors have caught the SEC's attention and caused some concern. The announcement sent shockwaves through the market, with Coinbase's stock plummeting more than 12% in afternoon trading. Coinbase is not backing down though, and has vowed to fight any potential action from the SEC, calling the agency's approach to digital assets unfair and unreasonable. It remains to be seen whether Coinbase will be able to clear its name and continue its reign as the king of crypto exchanges, or if it will face serious consequences. Bitcoin has proven to be an unstoppable force, with its price once again on the rise despite recent setbacks. Yesterday's Federal Reserve's interest hike announcement may have caused initial losses, but Bitcoin has since bounced back, and according to some analysts, they're even eyeing a $40,000 price target in the very near future. The reported arrest of Dogecoin and the SEC's actions against Coinbase haven't dampened the spirits of bullish crypto traders. In fact, as one trader boldly declared, "You can try to fade it, but we're just going to keep sending it from here." This resilience is a testament to Bitcoin's strength and its ability to weather any storm, even so-called black swan events that have occurred over the last few months. If anything, these challenges have only fueled Bitcoin's strength, making it an exciting time for the cryptocurrency market. Hold on to your digital wallets, folks, because Senator Ted Cruz is back at it again. This Texas Republican is joining forces with his Florida buddy, Ron DeSantis, to give the CBDC a big fat FU by proposing legislation to block its issuance in the United States. Cruz is concerned that a CBDC controlled by the Federal Reserve could be used to snoop into the private transactions of Americans. But don't worry, Senator Cruz is not against all things crypto. He's actually a big fan of decentralized cryptocurrencies like Bitcoin, and has even proposed legislation to allow politicians to spend their crypto on Capitol Hill. Will the United States join other countries in creating their own CBDC, or will they stick to traditional fiat currencies? That's all the time we have for today's AI Crypto News at Night. If you enjoyed the content, please share, like, and subscribe. And let us know your thoughts about Do Kwon's arrest and the future of CBDCs in the comments below. Until next time, take care and stay blessed. Welcome, AI Crypto Squad, to another exciting episode of AI Crypto News at Night, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. First up, Gary Gensler isn't the only US government prick that doesn't want you owning any crypto, as Massachusetts Senator Elizabeth Warren is once again smearing her dookie on the crypto industry and attempting to make Americans more dependent on big banks. Elizabeth Warren's draconian Digital Assets Anti-Money Laundering Act has the potential to drive cryptocurrency businesses overseas and weaken consumer choice. While the stated purpose of the bill is to protect Americans from scams, it seems more like a smear campaign against the crypto industry, which could make Americans more dependent on traditional banks, which are going to the shitter, of course. The bill would prohibit the use of digital asset mixers, require self-hosted wallets, and enforce AML policies on miners and validators. This would force many entities to shut down or stop servicing American users. Additionally, the bill is particularly harsh on decentralized finance, requiring platforms to record users' personal information and submit it to the government without a warrant or probable cause. The bill's effect would be to force many cryptocurrency businesses to close their doors or leave the United States, giving Americans few legal opportunities to participate in the industry. This would reduce competition in banking and other financial services to the benefit of traditional ones. Now here's the BS. In addition, the company that develops software for your local bank doesn't even have to comply with AML regulations. Now, while it's true that some crypto regulations and enforcement are necessary, Warren's bill amounts to a smear campaign against the industry, which could make Americans more dependent on shady-ass traditional banks. It's important to remember that the job of lawmakers is to promote the public good, not to carry out a crusade against an entire industry. Next up north here in Canada, where I'm from, Kraken, the famous crypto exchange, is gearing up to comply with new regulations in Canada. The Canadian Securities Administrators have recently implemented new guidance for crypto asset trading platforms. This has made it mandatory for Kraken to file a pre-registration undertaking, which will legally commit it to following new investor protections. The new requirements include things like new custody standards, restrictions on the use of leverage, and a ban on trading stablecoins without prior written consent from the CSA. But Kraken is not backing down. The exchange has been operating in Canada for over a decade and has now filed a pre-registration undertaking with the Ontario Securities Commission seeking restricted dealer status. This special kind of dealing registration is for firms that don't quite fit under any other category, and regulators tailor requirements for firms with this status individually. If Kraken is successful receiving this status in the province of Ontario, perhaps this opens the door for Binance's return to Ontario? On the other hand, cryptocurrency exchange OKX has decided to stop providing service to Canadian customers within 3 months due to these new regulations. But Kraken's managing director for Canada, Mark Greenberg, has assured both existing and prospective clients that the exchange remains committed to Canada. So don't you worry, Kraken is here to stay, and they're not giving up without a fight. Bitcoin continued its upward trend on Thursday, with the price of the largest digital asset briefly spiking above $29,100 in recent trading. This has spurred calls of a new bull market, with traders eyeing the psychologically important 30K level for the green light. The stock market's upbeat mood brought the price of Bitcoin back to the upper limit of the March trading range, said one analyst. However, as Bitcoin approaches $30,000, it may face short-term selling pressure. It seems Bitcoin is rising alongside stocks as investors look ahead to the inflation picture and shake off fears from recent bank health concerns. So if you're still confused about crypto, just remember that Bitcoin is like the cool kid in school, who always follows the trends. And right now the trend is up, up, up like last night's erection. Shout out to Five Dog, Rest in Power, and Tribe Called Quest. Let's see what Bitcoin has in store for us as we enter the weekend. That's all for AI Crypto News at Night, and thanks for tuning in. If you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about Elizabeth Warren trying to tear down the crypto space in America? Go ahead and comment below. And as always, take care and stay blessed. Welcome AI Crypto Squad to another exciting episode of AI Crypto News at Night, where we bring you today's latest and greatest news in the crypto space. Let's get into it. In case you missed it, Dogecoin has surged more than 30% in just a matter of minutes late this afternoon. And why, you ask? Well, it's all because of Twitter's CEO Elon Musk and his love affair for the meme coin. You see, Twitter recently replaced its iconic bluebird logo with Dogecoin's very own Shiba Inu dog. And just like that, boom, the price of Doge pumped from 8 cents to as high as 11 cents. But this isn't the first time Elon Musk has shown his support for Doge. In fact, he's been touting the meme coin for a while now, even suggesting that it may offer better payment functionality than Bitcoin. Interestingly enough, back in January, the Financial Times reported that Twitter was designing a system to allow payments through their platform. And while Elon Musk wanted fiat currencies to come first, he also sought the ability to add cryptocurrencies to the mix. And that story gave the price of Doge a nice little boost. So there you have it, folks. Dogecoin surging more than 30% thanks to Twitter's logo change and Elon Musk's unwavering support. Who knows what the future holds for Doge, but one thing's for sure. SEC douchebag chairman Gary Gensler is definitely in his feelings right now and will probably slap Elon with a Wells notice in the coming days. Next up, Cardano is starting to make some noise again. According to recent reports, Cardano's unique staking wallets have exceeded a whopping 1.23 million, with retail investors holding a staggering 66% of the ADA's supply. And to top it all off, Cardano has even managed to beat Ethereum in the number of unique staking wallets. Now, for those that are new to crypto staking is a process where you hold your cryptocurrency in a staking wallet to help maintain the security and integrity of a blockchain network. By doing so, you can earn rewards for validating transactions and securing the network. Staking can be a great way to earn passive income from your cryptocurrency holdings, but it does come with some risks. It's important to do your own research and understand the risks involved before deciding to stake your crypto. and always choose a reliable and reputable staking wallet to ensure the security of your assets. Now let's get back to this Cardano piece. Charles Hoskinson, the founder of Cardano, couldn't be more happier about this news and heaped praises on the leading blockchain in a recent tweet. In fact, he said that Cardano is pretty special, and it's almost like many people thought about how to build an excellent staking protocol years ago, and he made it happen. And if you're wondering if Hoskinson's claims are legit, then don't worry, we've got you covered. According to data from the cryptocurrency analytics platform Staking Rewards, Cardano has a staking ratio of just over 68%, while Ethereum's staking ratio is only at around 15.6%. This means that 68% of Cardano's total supply is staked compared to only 15% of Ethereum. In fact, the number of Apecoin staked is more than 4 times higher than that of ETH. However, it's important to note that Ethereum still leads as the largest proof-of-stake blockchain by capitalization, with a staking market cap of over $34.5 billion. Meanwhile, Cardano is ranked second with a staking market valuation of $9.65 billion, but still a significant achievement for the blockchain. And let's not forget about the retail investors who have been active in recent times. According to Into the Block data, retail investors now hold 22.63 billion ADA, representing 66.73% of the cryptocurrency supply. That's a pretty impressive figure if you ask us. So there you have it, folks. Cardano surpassing Ethereum in the number of unique staking wallets, with retail investors holding a significant portion of the ADA supply. We can only imagine what's in store for Cardano's future, but one thing's for sure, the ADA blockchain is definitely on the rise. And lastly, earlier this evening, we had a buy the rumor, sell the news type of event, as Binance CEO Changpeng Zhao, aka CZ, has come out to debunk rumors of an Interpol red notice issued against him. It all started with an encrypted message from Twitter user Kobe that read Interpol red notice for CZ. But CZ wasn't about to get played like that. He quickly discredited the rumors, citing Photoshop as the culprit. For those of you who don't know what a red notice is, it's something that's not to be played with, as it's a request to law enforcement worldwide to locate and provisionally arrest a person pending extradition or similar legal action. It's basically like a crypto bounty on your head, and we're not talking about the fun kind. The rumor mill has been working overtime lately, with the recent CFTC lawsuit against Binance and its CEO CZ, which sparked fears of an impending Department of Justice lawsuit and other criminal charges. But CZ has been doing his best to calm the community, even penning an official letter to address concerns and clear his name. Unfortunately, BNB, which is Binance's coin, the price has taken a hit from all the FUD, dropping almost 2% in the last 24 hours, and Bitcoin has been affected too by the rumors, causing a 1% drop down to $27,770. But CZ isn't worried. He's told the community to keep calm and carry on, warning against panic selling on every whim of FUD. And as for that shit disturber Kobe, CZ has asked community members to unfollow and block the Twitter user. Looks like our guy CZ has spoken, and the crypto community appears to be standing with him. Well, that's all for this extended version of EH-iCrypto News at Night, and thanks again for tuning in. If you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about Elon Musk pumping Dogecoin again, or your thoughts about the future of Cardano? Go ahead and comment below. And as always, take care and stay blessed. Welcome, EH-iCrypto Squad, to another exciting episode of EH-iCrypto News at Night, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. Well, it's a new day for ETH, as Ethereum's Shanghai upgrade, also known as Shapella, has been completed, marking a new era of staking withdrawals. This historic milestone has been in the works for years, as Ethereum transitioned to a full proof-of-stake network where users stake their cryptocurrency as a form of guarantee to help secure and confirm new data blocks. This upgrade allows users to withdraw their staked Ether or redeem accrued rewards, a crucial feature of the new paradigm. Since the upgrade, approximately 285 withdrawals in Epoch 194408 have been processed, worth around $10 million. However, the queue for withdrawals could take hours, as Ethereum can only process 16 partial withdrawal requests in a single slot, which happens around every 12 seconds. The price of ETH remained mostly flat during the upgrade, and about 4,000 people tuned into Chappelle's mainnet watch party hosted by Ethereum cat herders. During the live stream, Vitalik Buterin, co-founder of Ethereum, spoke about the importance of scaling and making transactions faster and cheaper. He emphasized that this will be the next issue that the blockchain tackles after Shanghai. Validators who stake at least 32 ETH to participate in the block validation process and secure the Ethereum network can now unstake their ETH and any rewards they've accumulated. Liquid staking providers like Lido and exchanges like Coinbase, Kraken, and Binance control a significant portion of the staked ETH. Overall, the Shanghai upgrade marks a significant step forward for Ethereum and its users, allowing them to fully participate in the proof-of-stake network. Bitcoin momentum continues as today's CPI report shows a decrease in inflation in March, falling to 5%, which is lower than market expectations. This is definitely a breather for the average American citizen who has been dealing with insanely high costs for the past year. In response to this news, the crypto market has reacted positively, with Bitcoin's price soaring by 1.5% in just a few minutes. And according to CoinGate, the core CPI annual rate in the United States was expected to be around 5.6% in March, and the previous value was 5.5%. This marks the end of 5 consecutive months of decline, and as a result, the US dollar index, or the DXY, has dropped significantly, currently sitting at 101.70. But let's cut to the chase. What does this all mean for Bitcoin's price? Well, it's on an upward trajectory, currently sitting above 30K at 30,100 at the time of this recording. So folks, there you have it. Inflation is down, Bitcoin's price is up, and the government is working overtime to have us all thinking that we're all feeling a little less burdened by the cost of living, which we all know is bullshit. Well, that's all for AI Crypto News at Night, and thanks for tuning in, folks. If you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about Ethereum's Shanghai upgrade? Go ahead and leave your comments below. And as always, take care and stay blessed. Welcome, AI Crypto Squad, to another episode of AI Crypto News at Night. We're here to bring you the latest and greatest news in the crypto world, all in 5 minutes or less. First up, we have Florida Governor Ron DeSantis, who's giving a big FU to the CBDC. That's right, folks. He's proposing a law that would prohibit the use of a national central bank digital currency as money within his state. In a press release, he said the CBDC would stifle innovation and promote government-sanctioned surveillance. And who wants that? Am I right? In addition to privacy concerns, DeSantis also mentioned that a federal CBDC would diminish the role of community banks and credit unions. And let's be real, community banks are the real MVPs. Who doesn't love a good small-town bank? They always give you a lollipop after you deposit your money. But in all seriousness, a CBDC could potentially cause a lot of issues, including security risks, bank runs, and monetary policy implications. So it's no surprise that some people are against it, including myself. Next up, XRP price rallied by 20%, and investors are growing optimistic about Ripple winning its case against the SEC. The XRP USD pair reached a 90-day high of just under 46 cents, and investors are hoping that Ripple may end up winning the lawsuit. If they do, it could mean big things for XRP and its supporters. And finally, Immutable and Polygon Labs are teaming up to expand the Web3 gaming ecosystem. The alliance aims to simplify the process of onboarding game studios and developers into Web3. This is great news for gamers who want to own their digital assets and not just rent them. Immutable and Polygon Labs are no strangers to partnerships, and they're always looking for new ways to expand the Web3 gaming industry. And let's be real, who doesn't love a good game with some digital ownership thrown in there? And that's all for tonight's episode of AI Crypto News at Night. Please like, subscribe, and share this newscast out if you enjoyed the content. And don't forget to leave a comment and let us know what you think about Ron DeSantis' stance against the CBDC. Do you think it's coming to North America? Only time will tell. Until next time, take care and stay blessed. Welcome AI Crypto Squad to another exciting episode of AI Crypto News at Night, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less, usually. Tonight we're gonna go beyond that, so let's get into it. Tonight, let's talk some CBDC again, as 2 Texas lawmakers have introduced identical bills for creating a state-based digital currency backed by gold. Yes, you heard that right, gold. Senator Brian Hughes and Representative Mark DeRosio have proposed a digital currency where a fractional equivalent amount of physical gold would back each unit. So, once you purchase a certain amount of digital currency, the comptroller would use that money to buy an equivalent amount of gold, and you would receive digital currency equal to the amount of gold that the comptroller purchased with your money. It's like having a digital gold bar in your wallet. Sort of. Now, this may sound like a great idea, but there are also concerns about introducing a CBDC. Florida Governor Ron DeSantis recently argued that CBDCs would grant more power to the government and provide them with a direct view of all consumer activities. On the other hand, Republican Senator Ted Cruz introduced a bill to block the feds from launching a direct-to-consumer CBDC, stating that it's more important than ever to ensure U.S. policy on digital currencies, which protects financial privacy, maintains the dollar's dominance, and cultivates innovation. So what are the pros and cons of a gold-backed CBDC? Well, on the one hand, it provides a more stable backing for the digital currency and could potentially increase trust in the currency. On the other hand, it could be more difficult to implement and could potentially increase the cost of administering the currency. Although neither of the bills proposed by Hughes and DeRosio has been passed or presented for a vote, it's an interesting concept to think about. In Bitcoin news, Bitcoin began the week with a pump breaking the 29K level. Analysts are predicting that the upcoming CPI data for March could be the push that Bitcoin needs to break through its current resistance and hit the coveted 29,000 milestone and beyond. Yuya Hasegawa, an analyst at Bitbank, a popular crypto exchange, believes that the CPI data could be the catalyst that Bitcoin needs to test and potentially surpass its resistance area. This is a big deal because Bitcoin has been hovering around the 27K to 28K range for the past few weeks, and investors, including myself, are itching for it to make a move. The CPI data is closely watched by investors to determine whether the Federal Reserve is succeeding in combating inflation. If the data shows that inflation is under control, it could provide the fuel that Bitcoin needs to finally break through its current resistance and potentially reach a new 2023 high. Of course, as with all things in the crypto market, nothing is certain. But with the mixed US jobs report released last week causing Bitcoin to be indecisive, investors are eagerly anticipating the release of the CPI data to see if it can provide that spark that Bitcoin needs to surge forward. At the time of recording, Bitcoin is currently on fire, trading at 29.9. So stay locked in. It's going to be an exciting week in the world of crypto, as we're bound to see some serious price action throughout the week. In other news, don't sleep on Gala, as Gala continues to make a whole lot of noise of late, as we have some exciting news for music and blockchain enthusiasts alike. Gala, known for being a global leader in Web3 gaming and music, has teamed up with multi-platinum producer Larry Devoskin to create a David Bowie-inspired NFT collection. The collection, which includes first-time access to a never-before-heard version of Bowie's 1983 hit, Let's Dance, will be released on April 14th to commemorate the 40th anniversary of the song and album. This limited-time collection gives Bowie fans a chance to own exclusive digital memorabilia or trade it on the secondary market for additional rewards. But Gala Music isn't just about music. It's also a leading Web3 gaming platform that revolutionizes the music industry. Its decentralized platform aims to provide a more interactive and rewarding experience for both artists and fans. Through blockchain technology, Gala Music is transforming music from a low-valued, streamed commodity into a unique and valuable experience. In fact, on March 29th, Gala Music launched its new platform, offering artists the freedom to create on the blockchain while providing an exciting reward-generating experience for fans. The company is committed to providing artists with a platform to share their music as they see fit, furthering Bowie's legacy of innovation in the music industry. So not only can you own a piece of music history with Gala Music's David Bowie-inspired NFTs, but you can also experience the future of music and gaming through Gala's music innovative platform. So listen up, EH-iCrypto fam. If you're new to the world of crypto and you haven't heard of Gala, then you're missing out on something big. Let me tell you, Gala is not your average gaming platform. They're taking things to the next level and they're not stopping at gaming. They're breaking into the film and music industries and are set to be a major disruptor. Yeah, you heard me right. They're going after Hollywood and the music industry. So let me break it down for you. Gala is not just a gaming platform, it's a multi-dimensional, decentralized entertainment platform that's taking the world by storm. With their cutting-edge blockchain technology, they're bringing a whole new level of interactivity and rewards to gamers, music lovers, and film buffs alike. And here's the thing, Gala is still in its early stage, which means the entry point is still low at just 4 cents at the time of this recording, but could reach $3 or more in the next bull cycle. But don't just take my word for it, do your own research and get in on the action while you still can. Not financial advice. Well, that's all for EH-iCrypto News at Night, and thanks for tuning in. Remember, the crypto market can be unpredictable, so always do your own research and invest wisely. And if you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about a gold-backed CBDC? And Bitcoin price action this week? Or Gala and its David Bowie NFT project? Go ahead and comment below. And as always, take care and stay blessed. Welcome again, EH-iCrypto Squad, to another episode of EH-iCrypto News at Night, where we bring you the latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. Our top story tonight is the mounting political pushback against douchebag SEC Chairman Gary Gensler and his war on crypto. U.S. Congressman Warren Davidson has introduced new legislation that seeks to oust Gary Gensler as the chairman of the SEC and replace him with a director. This comes in response to a series of regulatory actions that crypto industry advocates view as overreaching crackdowns on the sector. The proposed bill aims to remove the chairman of the SEC and replace the role with an executive director who reports to the board where authority resides. Congressman Davidson hopes to correct a long series of abuses and give more power to the board. This move is also in response to SEC Commissioner Hester Peirce's criticism of the agency's war on crypto. Peirce, also known as Crypto Mom, has been vocal about her opposition to the SEC's actions against the crypto industry. The SEC has remained relentless in its crackdown on crypto this year. Its latest salvo targets the DeFi ecosystem. The SEC announced plans to modify a proposed rule stating explicitly that DeFi platforms must register with the regulator. Gary Gensler has this ridiculous belief that many crypto trading and DeFi platforms already fall under the current definition of an exchange and must comply with securities laws that includes registering as a security. However, the dumbass still can't accept that no crypto asset has officially been classified as a security in the US as of yet. And a growing number of lawmakers are putting forward the argument that this should be the job of Congress, not Gensler. Well, folks, keep it locked as this story should get more interesting in the coming days. Next up, Shaquille O'Neal gets served. And we aren't talking about him being on the receiving end of a lob pass served up by the late great Kobe Bryant. The legendary basketball player and FTX advisor has finally been served with a class action lawsuit against FTX founder Sam Bankman-Fried, according to lawyers for the plaintiffs. The law firm tweeted that they served Shaq outside his house and his home video cameras recorded the process. The lawyers made it clear that he is not to destroy or erase any of the security tapes because they must be preserved for the lawsuit. This shit here gets even more hilarious. As Adam Moskowitz, co-counsel on the FTX lawsuits, he confirmed the story, stating that Shaq was hiding and driving away from our process servers for the past 3 months. Shaq's involvement with FTX has been dubbed, get this, Shaqtoshi, in a commercial, and he is one of several celebrities, including douchebag Kevin O'Leary, Tom Brady, and the greatest shooter of all time, Steph Curry, who are facing a class action lawsuit for promoting a fraudulent scheme. Shaq will now be required to appear in federal court and explain his FTX I am all in false advertising campaign. After FTX collapsed in November, Shaq said he was just a paid spokesperson for a commercial. This lawsuit has been a long time coming, and it will be interesting to see how it plays out in court. Shaq's involvement with FTX has been controversial, and this lawsuit could have far-reaching implications for dumbass celebrities like Shaq, who promote cryptocurrencies, having little or no knowledge of the crypto space. And lastly, Bitcoin has sparked some liquidations as analysts predict that its price may dip by another 12%. The cryptocurrency lost 3% on the day, with the start of Wall Street trading failing to rescue BTC's price from the loss of 30K. In fact, Bitcoin's price has now tipped for a break below 29K. Traders, many of whom had predicted a retest of support at 30K, were unsurprised, with many hoping that the event would form a buy-the-dip opportunity before Bitcoin moved higher. Popular trader CryptoWed said that the Bitcoin US dollar pairing had swept the lows, while others focused on the area around 28,500 as a potential bottom zone. Material Indicators co-founder Keith Allen eyed the 21-day moving average at around 28,860 as a short-term support. Should this fail to hold, he said, it might spark a retest of the 200-week moving average at 25,860. That's around 12% lower than the current spot price at 16.5% below the recent local high. But I wouldn't worry too much, folks. As we always say, there's always going to be peaks and valleys in the market, and a little capitulation isn't such a bad thing. It could even be a great opportunity to buy at a discount. In other news, the second largest cryptocurrency by market cap, Ethereum, is fresh off its Shanghai upgrade and remains strong at just under 2,100 at 2075 at the time of this recording. So while Bitcoin may be experiencing a dip, Ethereum is holding steady. Well, that's all for AI Crypto News at Night, and thanks for tuning in. If you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about Gary Gensler possibly getting ousted as SEC chair? or Shaq getting sued for his involvement with FTX, or Bitcoin cooling off a little bit from a price standpoint? Go ahead and comment below. And as always, take care and stay blessed. Welcome EH-iCrypto Squad to another episode of EH-iCrypto News at Night, where we bring you the latest and greatest news in the crypto space all in 5 minutes or less. So let's get into it. Let's start with the big news of the day. Bitcoin has sunk below 27K as the US Federal Open Market Committee, the FOMC, raised interest rates by a quarter point. This decision reinforces the Federal Reserve's concerns that inflation remains problematic. Bitcoin, being the largest cryptocurrency by market value, was recently trading at just over $27,000, down 4.1% over the past 24 hours. On the other hand, Ethereum, the second largest cryptocurrency by market value, was recently hovering around the 1740 level, down 3.1% from Tuesday. Ripple's XRP token was recently down 11%, a reversal from earlier in the day when it jumped 20% on reports Ripple was well placed to win a landmark case against the SEC. With all these discounts on crypto, remember EH-iCrypto Squad, scared money don't make no money, so buy the dip. Not financial advice. Next up, Tron founder Justin Sun has been sued by the SEC on securities and market manipulation charges. The regulator alleges that Tron and BitTorrent are unregistered securities and claims Sun created an extensive wash trading program to boost their trading volume. The SEC said that Sun tried to artificially inflate Tron's trading volume through the wash trading scheme by having his own employees engage in more than 600,000 wash trades of TRX between two crypto asset trading platform accounts that he controlled. But that's not all. The SEC is also suing a bunch of celebrities on illegal touting charges for their roles allegedly promoting both TRX and BitTorrent without disclosing that they were paid to do so. And the list of names including Lindsay Lohan, Jake Paul, Lil Yachty, Soulja Boy, Akon, and Neo, whom the SEC will be coming to collect from. Now, if these guys are your voice of reason in the crypto space, please do yourself a favor and find another hustle. In other news, blockchain messaging is set to replace Telegram and Discord. Your crypto wallet will become your mailbox and offer functionalities that Web 2 messaging platforms like Discord and Telegram can only dream about. I mean, who needs a regular messaging app when you can use a blockchain messaging app that's secure, decentralized, and can enable micropayments for messaging services? And let's not forget the added benefit of being able to prove the authenticity of the message sender. Well, that's all for this episode of EH-iCrypto News at Night. What are your thoughts about the latest interest rate hikes? Do you think we're on our way to putting all this inflation in the rear view? Drop a comment and give us your thoughts. And don't forget to like, share, and subscribe. Take care and stay blessed. Welcome again, EH-iCrypto fam, to another episode of EH-iCrypto News at Night. Well, the FUD continues. It was another shitty day with the crypto markets, as yesterday we had the fallout with Silvergate Bank going insolvent. Today it's US President Joe Biden now going in on crypto miners. The United States crypto mining industry could face a 30% tax on electricity costs under a budget proposal by President Biden aimed at reducing mining activity. The proposal, outlined in a U.S. Treasury budget paper released earlier today, would apply to any firm using resources, whether owned or rented, and would be phased in over 3 years with a rate of 10% per year. This proposed policy gets even more ridiculous as Sleepy Joe intends to go after crypto miners who acquire their electricity needs off-grid. They too would still be subject to the tax and would be required to estimate the electricity costs generated by any electricity generating plant. But mining lithium batteries for EV vehicles that both Joe Biden and Justin Trudeau keeps pushing on the people is far more cleaner than crypto miners? GTFO. EH. Next up, the New York Attorney General's office has filed a lawsuit against KuCoin, the cryptocurrency exchange, for allegedly buying and selling crypto assets without being registered in the state. The Attorney General, Letitia James, stated that the exchange was operating in violation of the laws and putting investors at risk. The lawsuit seeks to stop KuCoin from operating in the state and block access to its website until it complies with the law. In addition, James filed a petition in court claiming that Ethereum, Terra Luna, and Terra USD are all securities. James justified the action against KuCoin by stating that the exchange must be held accountable to protect investors. Yeah, right. Word of suggestion to those who have anything on KuCoin: until things boils over, head to another exchange or store your assets on a self-custodial wallet. Not financial advice. Next up, the crypto markets are once again down today as Silvergate's bank's demise, a U.S. regulator-led lawsuit against KuCoin Exchange, and hawkish comments from the United States Federal Reserve Chair Jerome Powell spooked investors. Bitcoin's price hit a monthly low today at just over 20,200, and after the key 21,600 level was breached. Traders are worried that a revisit of bear market lows could occur. Similar worries exist for Ethereum, which also reached a monthly low at 1425, leading analysts to suggest that bears are in control of Ethereum's price. With the overall market sentiment being negative, it remains to be seen how the crypto markets will perform in the coming days. In conclusion, these events are nothing new to the crypto space, so don't let the FUD scare you out of the market. As I said yesterday, and I'll say it again, money is made when there's blood on the streets, so keep filling up your crypto bags while all these great projects are heavily discounted for the time being. Thanks for tuning in, and please be sure to like and subscribe and hit the notification bell for more AI Crypto News at Night updates. Stay blessed, fam. Welcome, AI Crypto Squad, to another exciting episode of AI Crypto News at Night, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. The biggest gangsters of them all, not these guys, are now offloading their Bitcoin or your Bitcoin. Nah, more like these guys here, the biggest thugs in the world. The US government, which plans to liquidate over 41,000 bitcoins seized in the Silk Road case connected to Ross Ulbricht, the marketplace's creator. That's a hell of a lot of digital gold, worth around $1.1 billion, and it's expected to be sold in 4 batches throughout the year. Now, if you're not familiar with the Silk Road case, it was an online marketplace where you could buy a plethora of illegal shit like drugs, guns, rocket launchers, hired assassins, stolen credit card information, etc. It was shut down 10 years ago, and its creator, Ross Ulbricht, is currently serving 2 life sentences without parole. Now, if you're still not familiar with this case, Hollywood did put out a Silk Road biopic back in 2021. Now, I'm sure you're wondering, how could all this impact Bitcoin's price and liquidity? Well, I don't think it's going to have much of an impact from a negative standpoint, because when you factor supply of Bitcoin being extremely limited, there's only like 19 million Bitcoins to go around, coupled with demand remaining extremely high for Bitcoin, while due in large part to the current collapse of the traditional banks and the legacy financial system as a whole going to the shitter. Many people are just in a haste to fill their Bitcoin bags up. Let's also factor in that the 41,000 plus Bitcoin that the feds are planning to offload will all be done in separate batches spread out over a long period of time. It may have less of an impact on the market compared to if it were all sold at once. This all seems very sus to me. In business, you know that old model, buy low and sell high? You know, we're still in the bear market. Wouldn't it make sense to sell during the upcoming bull cycle at say 75K or higher, rather than at these current prices at around 28,300? Oh, I get it. Perhaps the US government is liquidating their Bitcoin or your taxpayers' Bitcoin to bail out all of their shady ass banks. Nevertheless, this should be another roller coaster week in crypto. Well, that's all for AI Crypto News at Night, and thanks for tuning in. If you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about the Feds offloading the taxpayers' Bitcoin holdings? Go ahead and comment below. And as always, take care and stay blessed. Welcome, AI Crypto Squad, to another exciting episode of AI Crypto News at Night, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. First up, let's talk about XRP, as XRP is on fire. The payment-focused cryptocurrency has been pumping hard as of late. Recently, XRP has rallied 57% since March 22nd, reaching a 10-month high of about 58 cents before retracing to its current price at 53 cents at the time of this recording. But what's driving this surge in XRP's price? Well, it turns out that investors are hopeful that Ripple Labs, the company that issued the token, will win its legal battle against the SEC. But what's the issue between Ripple and the SEC, you may ask? Well, douchebag SEC Chairman Gary Gensler. In 2020, Gary charged the Ripple network with selling unregistered securities after the platform sold $1.3 billion worth of XRP. Ripple has long maintained that XRP is a commodity and not a security, as alleged by the SEC. Now, if the court rules that XRP is indeed a security, it would mean the same for other altcoins and subject the broader market to stringent supervision and negative impacts on both price and innovation within the crypto space. The notional open interest, or the dollar value locked in unsettled and active XRP contracts trading on futures and perpetual future exchanges, has increased by nearly 90% to a whopping $843 million since the rally began. An increase in open interest coming alongside an increase in price typically suggests an influx of new money on the bullish side and is said to confirm the uptrend. Additionally, funding rates were positive on most exchanges, indicating the dominance of bullish leverage traders. Now here's where things get interesting. If Ripple wins the lawsuit, it could set off a bullish impulse down the risk curve, also known as an alt season. Alt season is a crypto slang that describes a period where altcoins like XRP, Cardano, Apecoin, Polygon, gaming tokens such as Decentraland and Sandbox, DeFi coins such as Aave and Uniswap, and meme coins such as Shiba Inu and Dogecoin that outperform both Bitcoin and Ethereum. A Ripple win would solidify XRP's legality in the US market and help drive a major price rally. However, a loss could rekindle risk aversion and impact other altcoins, as they will likely be subject to more regulation. In conclusion, the verdict of this lawsuit could have significant implications for XRP and the broader crypto market. Next up, despite Binance's legal drama, Bitcoin and other major cryptocurrencies have had a surprisingly happy hump day. Bitcoin, the biggest crypto by market cap, is currently trading at $28,380, up 3.9% in the past 24 hours, and well above its lows below 27K earlier this week after the Commodity Futures Trading Commission, better known as the CFTC, sued Binance for allegedly offering unregistered crypto derivatives. Bitcoin has outperformed other assets in March, including stocks and gold. Ethereum, the second largest crypto by market value, is currently trading at $17.94, gaining 1.1% for the day. Cardano's ADA token and Polygon's Matic are also up, with ADA gaining 3.8% and Matic 3.3% respectively. It seems the crypto market is having a good day, despite Binance's troubles. Let's hope this upward trend continues. And that's all for tonight's episode of AI Crypto News at Night. If you enjoyed this newscast, please like, subscribe, and share it out. And feel free to drop a comment and let us know what you think about XRP's case against the SEC and how the decision will impact the crypto market. Until next time, take care and stay blessed. Welcome again, AI Crypto Squad, to another episode of AI Crypto News at Night, where we bring out the biggest news stories in the crypto space in 5 minutes or less. Let's get into it. Another bank bites the dust as yet another bank shuts its doors for good. Silicon Valley Bank, a major financial institution for venture-backed companies, has been shut down by California's financial watchdog. This marks the first Federal Deposit Insurance Corporation insured bank to fail in 2023. According to reports, the California Department of Financial Protection and Innovation ordered the bank to close, but the exact reason for the shutdown has not been disclosed. Depositors will have full access to their insured deposits no later than Monday morning, March 13th. Uninsured depositors will be given a receivership certificate for the remaining amount of their uninsured funds and will be entitled to future dividend payments once the FDIC sells all Silicon Valley Bank assets. Silicon Valley Bank, also known as SVB, is one of the United States' 20 largest banks by total assets and has 17 branches across California and Massachusetts. This is just another example in how volatile the fiat financial system is and how important it is to have crypto in your investment portfolio, as the bank doesn't allow you to self-custody your assets. Not financial advice. Remember, Satoshi's true intended purpose for Bitcoin was to put it in cold storage, not to trade it, but to transact with it as a P2P currency. The crypto market continues to face a downturn as the closings of both Silicon Valley Bank and Silvergate Capital Corporation, coupled with a U.S. regulator-led lawsuit against KuCoin, are impacting the industry. Ethereum's price has taken a hit, reaching a monthly low of $13.79 after the New York Attorney General filed a lawsuit against KuCoin for not registering securities. This lawsuit comes as the Attorney General maintains that Ethereum is a security under the law. Bitcoin has also suffered, with its price dipping to $19,945 before recovering to just above $20,000, according to data from CoinMarketCap. The price has been struggling since falling as much as 5% in an hour on March 3rd amid uncertainty at Silvergate. Nevertheless, this crypto downturn is a great opportunity to get your crypto bags up, dollar cost averaging down, with the mindset to accumulate is the way to go. EH-iCrypto News serves as a reminder of the volatility of the crypto market and the need to stay informed on the latest developments. Thank you for tuning in to EH-iCrypto News at Night. Be sure to like and subscribe for more updates on the latest news in the world of cryptocurrency. Stay blessed. Welcome, EH-iCrypto Squad, to another exciting episode of EH-iCrypto News at Night Week in Review Edition, where we bring you this week's latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. First up, it was a shitty week for one of crypto's biggest scammers, as another major bad actor in the crypto space got cuffed up, as Terraform Labs co-founder Dogecoin has reportedly been arrested in Montenegro. Kwon has been wanted by Interpol for his role in the $40 billion collapse of the Terra Luna platform back in May of 2022. His aide, Han Mo, wasn't spared either and reportedly got arrested with him. Questions are being raised whether Do Kwon will be extradited to the States to face charges on American soil. That we'll have to wait and see. Douchebag King / SEC Chairman Gary Gensler now has set his sights on Coinbase. The largest crypto exchange in the US was handed a Wells notice for possible violations of federal security laws. The exchange's staking programs for crypto investors have caught the SEC's attention and caused some concern. The announcement sent shockwaves through the market, with Coinbase's stock plummeting more than 12%. However, Coinbase is not backing down and has vowed to fight any potential action from the SEC, calling the agency's approach to digital assets unfair and unreasonable. It remains to be seen whether Coinbase will be able to clear its name and continue its reign as the king of crypto exchanges, or if it will face serious consequences. Bitcoin this week has proven to be an unstoppable force, with its price once again on the rise despite recent setbacks. Even with the Federal Reserve's interest hike announcement, which caused initial losses, Bitcoin since bounced back, currently trading around 27,800 at the time of this recording. Many analysts are eyeing a 40K Bitcoin price target in the very near future. Ongoing global bank collapses, the reported arrest of Dogecoin, and the SEC's actions against Coinbase haven't dampened the spirits of bullish crypto traders, as on-chain data shows Bitcoin long-term holders now hold 78% of the total circulating supply, the highest value the metric has ever seen. This resilience is a testament to Bitcoin's strength and its ability to weather any storm. If anything, these challenges have only fueled Bitcoin's strength, making it an exciting time for the cryptocurrency market. This week, we also saw a well-publicized resistance to President Joe Biden's proposed CBDC, as both Texas Republican Senator Ted Cruz and Republican Florida Governor Ron DeSantis gave a big FU to the CBDC. They argued that a CBDC controlled by the Federal Reserve could be used to snoop into the private transactions of Americans. Interesting enough though, Senator Cruz is not exactly against all things crypto. Matter of fact, he's a big fan of decentralized cryptocurrencies like Bitcoin, and has even proposed legislation to allow politicians to spend their crypto on Capitol Hill. Will the United States join other countries in creating their own CBDC, or will they just stick to traditional fiat currencies? Well folks, that's all the time we have for tonight's edition of EH-iCrypto News at Night Week in Review. If you enjoyed the content, please share, like, and subscribe, and let us know your thoughts, whether it be about Do Kwon's arrest, the state of crypto, global bank collapses, or the future of CBDCs. Go ahead and comment below. And until next time, take care and stay blessed. Welcome again, EH-iCrypto Squad, to another exciting episode of EH-iCrypto News, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. BitMEX founder and crypto billionaire Arthur Hayes, who's one of the more influential figures in the entire crypto space, is letting Americans know that with high inflation, coupled with traditional financial systems going to the shitter, your bank savings are going to suffer. But he says there are solutions to preserve your money bags. According to Hayes, Americans are about to face a wave of inflation that will severely damage their savings. In a recent blog post, Hayes stated that as the US loses dominance over the global economy, financial markets will balkanize into several blocks rather than make way for another hegemony. This means that the government will go to great lengths by creating barriers to prevent the masses from exiting printed money to crypto and other assets, as they need both you and I as exit liquidity. Hayes notes that the US is already making it harder to store money in decentralized crypto wallets, perhaps in anticipation of a potential exodus from the traditional financial system. And as a result, he believes that crypto and gold will move to the forefront of financial markets as investors and countries look to shield themselves from currency debasement. While the accumulation of gold has already begun, Hayes says that Bitcoin could be next. He believes that as countries start looking out for their own best interests, central banks of the global south will diversify how they save their international trade income. He also added that gold and crypto will be the focus, as they cannot be debased at will by a central bank desperate to prop up their financial system with printed fiat money. Moreover, Bitcoin continues to prove that it's the hardest money ever created. Hayes expects that more and more countries will at least start to consider whether it is a suitable savings vehicle alongside gold. Everything that Hayes brought out is spot on. And EH-iCrypto Squad, let this news story be a call to action, as a legacy financial system shitstorm is definitely on the horizon. So stay locked into the movement of gold and crypto in the financial markets as investors and countries look to protect their savings from the impending inflation. Next up, Bitcoin has dropped below 28K since yesterday, with the largest cryptocurrency by market capitalization trading at around 27,400, down 0.2% in the past 24 hours. According to Sam Callahan, an analyst at Bitcoin financial services firm Swan Bitcoin, Bitcoin's recent price drop can be interpreted as a period of consolidation and a healthy correction after an explosive move upwards past 30K over the past few weeks. Investors, including myself, are keeping an eye on next week's FOMC meeting with a 91% probability of the US Central Bank raising interest rates by 25 basis points. This has led to caution among market participants, with several economic metrics signaling weakness in the economy. Meanwhile, Ethereum, the second largest cryptocurrency by market value, was changing hands around 1830 as of Tuesday morning, down 1.3% from Monday. Over the past week, both Bitcoin and Ethereum have sunk 7% and 11% respectively, as investors mulled over industry and macroeconomic uncertainties. Despite the recent dip in prices, as I've said many times before, and will continue to say on this channel, incorporating a good dollar cost averaging strategy at these current prices is vital, not financial advice. Well, that's all for AI Crypto News, and thanks for tuning in. If you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about Arthur Hayes and his opinions on inflation negatively impacting fiat savings accounts? Feel free to go ahead and leave your comments below. And as always, take care and stay blessed. Welcome, AI Crypto Squad, to another exciting episode of AI Crypto News, where we bring you today's latest and greatest news in the crypto space in just 5 minutes or less. Let's get into it. Well, another bank bites the dust and Bitcoin pumps. First Republic Bank and its shares have been on a downward spiral, reaching a record low today of $3.79, down nearly, check this out, 97% from its 6-month high of $116.50. And it gets worse, as the lender announced that depositors withdrew over $100 billion large in the first quarter alone. This massive bank run has put First Republic Bank under massive pressure, particularly after a series of bank failures in the United States, which sparked fears of a wider crisis. But of course, the US government are now trying to remedy this latest legacy financial system train wreck, as they now have stepped in to coordinate urgent talks to rescue the bank. More than likely talks involving a bailout. This dumpster fire at the FRB has taken a heavy toll on financial institutions in the US of late. And as they continue to take major L's, Bitcoin continues to win, as Bitcoin gained a significant foothold near 30K, currently trading at $29,270 at the time of this recording. With declining confidence in the US and global banking systems as a whole, the interest in Bitcoin, which emerged during the previous massive crisis caused by banks, is definitely on the rise. So in conclusion, the crisis at the FRB is yet another reminder that the traditional banking system is nothing more than a house of cards that's on the verge of crashing. While the situation is still unfolding, Bitcoin and crypto continues to emerge as an attractive alternative to traditional financial systems, particularly in times of crisis. Next up, very much similar to what's happening over here in North America, down south, the people of Argentina have given a big FU to fiat currency, as we have a story about the Argentine peso devaluation and how it's driving Bitcoin's popularity in Argentina. The decline in the ARS, Argentina's local currency, historically has led Argentinians to seek shelter in the US dollar, which has now become increasingly scarce due to rising demand in the country. Unsurprisingly though, as traditional currencies tank, Bitcoin and other cryptocurrencies outside the control of governments and central banks have emerged as alternative options to the people of Argentina. Data has shown that Bitcoin's peer-to-peer weekly volume in Argentina reached a record high of nearly $30 million on the Paxful exchange in March. A 2022 study also revealed that about 60% of Argentinians believe Bitcoin can preserve the value of their savings in the long term. Leading US cryptocurrency exchange Coinbase supports the idea of Bitcoin becoming legal tender in Argentina, highlighting the growing trust in digital currencies. This trend is further evidenced by a recent bill proposed by the Ministry of Economy, which encourages citizens to declare their crypto holdings and offers tax benefits as an incentive. In conclusion, the devaluation of the Argentine peso has led to a surge in Bitcoin's popularity in Argentina, and as traditional currencies struggle, people are turning to Bitcoin and other cryptocurrencies for financial stability. At least in Argentina, unlike here in North America, their government and financial sector are beginning to recognize the potential of digital currencies. Well, that's all for AI Crypto News, and thanks for tuning in. If you enjoyed this newscast, please like, subscribe, and share it out. And what are your thoughts about Bitcoin and crypto becoming an alternative to fiat currency and legacy financial systems? Go ahead and leave your comments below. And as always, take care and stay blessed.